Worst behind us. Are we headed for a big summer rally? Joining us now is Tom Lydon, ETF Trends editor, and Eugene Profit, CEO of Profit Investment Management. Thanks to both of you for joining us. Tom, that is the #1 question of the day. Is this the start of something new?
Well, I think the key is, Melissa, the average American is feeling like they're living through the movie Groundhog Day. The market runs up one month just to fall the next. And right now, major trends are below their 200-day averages. So with that, I would stay on the sidelines, but that doesn't mean that there aren't some pockets or some areas that you can invest in and make money, and we choose to do that through ETFs.
Okay, Eugene, what do you think? Same question.
Well, yeah, I think in the short term you can see a little bit of a rally here. The market participants seem to want to take the market a little bit higher, even though we don't think the economic data effectively supports that. If you want to look at retail sales, they were pretty positive, and this morning, even though jobless claims, the weekly jobless claims were a little bit better than expected, they're still pretty weak, but yet the market went a little bit higher.
This is the sentiment over and over again, right, Larry? I mean, it's this thing, we see things that are positive, it looks like the market's moving higher, but at the end of the day, I'm still just too scared, too pessimistic.
I'm a wee bit more optimistic, but let me just play something from my interview with Treasury man Tim Geithner last night. It could be a little bit of good news in a world of rising taxes. Let's take a listen.
Let me tell you what the president's going to fight for and propose. We're going to make sure that we extend and leave in place tax cuts that will go to benefit more than 95%, not just of individuals in this country, but of businesses across the country. We think that's good policy, good for the country, sensible policy. We're going to make sure that we keep at 20% the existing rates on dividends and capital gains. We think that's good policy, too.
All right, Tom, so the first part, not so good. But the second part, it could have been worse, and the Congress wants a 40% dividend tax rate. Mr. Geithner said they want 20 and 20, up from 15 and 15. Does that warm your heart? Do you jump for joy? Do you rush out to buy stocks on this?
I don't think so, Larry. 20 is obviously better than 40, but obviously they're going to go after the wealthy. And if the wealthy aren't spending, and again, you did a great job last night, but also the retail experts that you just had on didn't touch on the base that luxury sales are down last month. MasterCard just reported that. If the wealthy aren't spending, if they're cutting back, we're not going to get the recovery that everyone's looking for.
You know, Eugene, one thought I had, I ask you about this. The rally yesterday and the better tone the day before, is some of this imported from Europe? The euro currency has bottomed and it's up 6%. That's a sign of health. The Euroland banks borrowed only half from the ECB. That looks like a sign of health. We'll get the stress test today. Is some of this rally imported from a better European tone?
Yeah, absolutely. I think that we've stepped away from thinking that there was going to be a big run on European banks. That economy seems to be improving a little bit, albeit a little bit at a time. But you also had the president talking a little bit more yesterday about exports sort of driving a little bit of recovery. So I think all that wrapped together and the market being so weak the past week and a half led to kind of a lot of pent-up buying demand on very weak volume.
Eugene, let's build on that theme a little bit, because one of your themes is Medtronic. They get 40% of their revenue or 40% of their sales, come from overseas.
Right.
So, do you need the dollar to continue to weaken along the theme that Larry was saying as people have more confidence in the euro in order for this play to make sense, or how dollar dependent is that pick?
No, I don't think it's dollar dependent. I think actually more towards the dollar is the fact that the deficit is so large that actually U.S. borrowing costs are lower. But effectively, your growth is in emerging markets and around the world. As President said, 95% of the growth probably is coming from that area. And so basically the Medtronic play is more based on the fact that the tax that's being proposed with the healthcare reform doesn't impact overseas revenue. And so if 40% of revenue is coming from overseas and growing, we think there's a mispricing going on with respect to investors being concerned in the healthcare space about healthcare reform.
Tom Lydon, are you going to make any investment bets on the earnings season, which really starts next week? That's going to be a key part. Profits of the mother's milk of stocks. Are you ready to make any investment bets?
It is, Larry, and the key is last 6 quarters have been better than expected. But so far, listening to the street, they're thinking that this quarter it may disappoint. So we're keeping our powder dry. We're staying on the sidelines, and corporate bond yields are 6 to 8%. You can get some great ones with JNK. Also, the yen has actually been performing very well this last month, up 5%. And finally, if you look at Indonesia, it's been the single best performing country ETF so far this year, up 17%, loaded with natural resources, a great consumer base. here's some areas where you can make money and maybe buck the normal trends.
Okay, guys, thanks so much for joining us. We appreciate it. Trish.
Okay, coming up next, you love this one, viewer outrage.